Brian, let's talk about minimizing one of your greatest expenses, taxes. For those of you with a high net worth who also earn a considerable income, basic living costs such as essential housing, food, and transportation may not take up a large share of your expenses. You may have higher costs associated with having many dependents and more to pay for, but when you earn more, you pay more in taxes as well. If your tax rate is in the high 20s or 30s, that bill can amount to a high portion of your total cost. So, Brian, let's figure out how to minimize it, shall we?
Yeah, I mean, taxes is a huge part of. I mean, when I first started over 20 years ago, the technology wasn't there. For fintech or financial technology, right, has really boomed for financial planners and.
Which is what, projecting what the stock market will do or that kind of thing?
No. It's the planning and being able to analyze, right, a person's situation.
Oh, right.
It was very rudimentary and just almost like a spreadsheet back in the day, even though it was on a computer.
Here's what you make. Here's what you're planning.
Yeah, I mean, it would figure out like, okay, it's 7% return, and it was just very. I mean, now this stuff is incredible. It's just the stuff that it can figure out, and they continue to get it better. Like every week, there's an update. Like, oh, we added this feature and this feature.
So are you constantly updating your software all the time?
Well, they are. Yeah, I mean, it's the company that we use, but the point is that we're able to figure someone's extremely complicated situation. Right? They have corporations, LLCs. They've got commercial investment real estate, maybe single family rentals. They have a K-1 coming from their business that flows over, paycheck that's taxed differently. They got their IRAs and they're saying, I want to retire at 70. My wife wants to retire at 66, right? And she's got the pension because she works, a regular government job or something, right? And it's all the. I mean, it takes us hours to just enter the data.
Yeah.
Because if you don't put the data in,
it's just data entry at that point,
right? If you don't put it in accurately, the output is worthless.
Oh yeah,
right.
So you have checks and balances to
double
check.
It's like, okay, why do we have so much cash in this one? Because we're actually putting every position in there too. So if they have, let's say, mutual funds or stocks or ETFs, and they're invested, we actually put the exact, and it's tracking the risk and the return right in there. So it projects if it did 7% in the last 20 years, it's going to project 7% going out. Not every year, obviously, the up and down.
Right.
And it's just, but the biggest thing of all that, I'm trying to tell you that the reason we go in there, mostly my concern is one of your biggest expenses is taxes, especially for the typical person.
Is it one of, or is it the biggest?
Oh, expense? It is. It's definitely the biggest, right? I mean, compared to, it depends on the person's situation and where they save. That's why we're trying to get people in their 50s and 40s that are listening. And in fact, we just had a young professional just started his business and reached out. It's like, I need some help because I'm hearing you talk about the people that come in your office when they're 65. I don't want to be that guy. I don't have a lot, but I need some guidance, right? Because they're saving in the wrong place. We all got told, put it all in your 401k, save it in your 401k, right? And when we're looking at people, I mean, we've got people that are now doing Roth conversions, and it's painful. And I'm going, well, this will probably save you $1 million in tax at a 6% interest rate because you don't need the money, but you saved it in there because everybody told you that you were saving all this money. No, you got a little deduction, but you got to pay more later because it's grown. And so taxes is just a huge part of a wealthy family's life in retirement. And I just got up because I called one of my clients about her tax return. She's like, oh, Brian, I cringe when you call me during tax season because I review, her return after Kim, our CPA, puts it in. And I'm just looking at all, seeing if everything looks right, and I like following up with her and telling her. She's like, Brian, do I owe a lot? I'm like, actually, you're getting a refund this year. She's like, oh, that's great. But last year wasn't the same, because she has a lot of taxable accounts, right, where the income is generated, and she might not need it, right? Dividends that are coming out, and then she's got these IRAs. I'm like, you don't need these in retirement. We could live on just your taxable and your trust accounts that you have, your IRAs are really for your kids. They're just for your kids because you're not going to, I mean, unless, even if she earns zero, right? Because she lives low and she's debt free. So, you know, there's a lot of tax strategies that people don't want to address. But I mean, there's a great article in US News, money.usnews.com, and it talks about tax planning for high net worth clients. And it shows some basics. The problem with some of these articles, they say, maxing out your retirement accounts. Is it really that great to max out all your retirement accounts? Some of the lowest tax-wise people in retirement do not have a lot of IRAs. Like the lowest tax, they're not, they don't have
the money to put into it, you mean?
No. They might have a $4 or $5 million net worth, but their taxes, they're invested in real estate or taxable accounts, and you can tax loss harvest. You know, there's other things you can do versus an IRA. You got, you know, $3-4 million in an IRA. Well, you're taking it out even if you don't need it or not, right? So there's just a lot of things that you can do with tax planning if you have someone that can help you with that. I mean, that's kind of the biggest issue. That's why 99% of our clients come to us. It's like, well, I'm not getting that help. And I need someone to look at the whole picture because I'm starting to pay too much in tax, right? Whether that's a good problem to have. With my business, somebody had an attorney come in and he's paying $400,000 in tax. And he's like, well, yeah, I know I'm paying a lot, but my CPAs are really good. Are they good though? Because you just told me 5 minutes ago that they're not giving you any tax planning advice and reducing your tax, but they do a good job. Okay, so there's a lot of CPA firms that will actually file your return fine.
Yeah, they filled out everything correctly.
Right. I didn't say they were like, you know, doing something.
Making mistakes.
Right. Yeah, you know, but what are they doing to proactively reduce your tax bill? And I literally, sitting in my head, I know like 4 things right then. Of course, I'm not giving them this information for free.
Right.
But I'm sitting here going, there's so many things you could be doing. But the reality is he had so much blind trust for that CPA. Well, my dad, you know, they did.
We've been using them for 33 years.
More longer than that. Yeah. No, the firm's been around for like 60 years, and dad and granddad, and you know the family.
His dad ran it, and we used him.
The family trust money, and they handle all the corporations and all this stuff. I'm like, well, that's fine.
We used to deliver our taxes by horseback.
But I'm like, we could easily reduce, you know, by 20%. I mean, you know, easily, probably 25%. What is that? That's $100,000 a year.
Oh my gosh, yes.
A year. So, you know, it's like the juice has to be worth the squeeze. And I think the fees that we charge would be a fraction of that tax saving. So how much does he actually pay?
The juice has to be worth the squeeze. I'm remembering that one. That was a good one, dude. That was a nugget.
Well, it's true, though. Like, you know, you can't, somebody goes, okay, well, what kind of tax strategies you can show me? Okay, well, we're going to charge you $10,000, and I think we're going to save you about $6,000. That's a great deal for us, right?
Yeah.
I wouldn't even offer that. And I'm like, there's not much. I mean, here's some free things you can do. Go to your CPA and see if they can implement it, right? But someone like that, like the work that's involved, it has to be worth it, right? You know, we have to be able to show value to make sure that, you know, there's a benefit to the client, right? We can't just, you know, oh yeah, well, we're going to charge you, you know, this huge amount, and they don't get the benefit. So it's easy with tax planning because you can look at somebody's situation and go, if you do this, this, and this is where we could save you.
I was talking to my mom over the weekend. She's done taxes. She's done my taxes for a million years. And I told her, I was like, man, I wish I wouldn't have gotten into this regular 401k. I wish that this could have been a Roth. And she was like, why? I said, because I do a show with Brian Bowen. I know what's up. And I was like, so she goes, it's pre-tax. It's going in. You're not paying taxes on it. And I said, till I take it out.
Right.
And she goes, but you're also getting a match. And I went, I know, but with the Roth. And she goes, I don't think you're doing so bad. It's that old.
Yeah.
It's that thought process.
So the match should be there. It is free money, right? So it's like 100% return, right? Think about it. So if they, and I don't know what the match is here. I can't remember what you told me.
Let's just say it's 25%.
Yeah, right. But let's say it's like ours is dollar for dollar for our employees.
Wow.
So if they put 6% in, they get 6%, right, on their money. So let's say one of my employees last year, I think, put in, I don't remember what the match was, $7,000 or something, right? So if they got $7,000 from they put in a Roth 401k, but it comes pre-tax. So the $7,000 that Integrity matched actually came in pre-tax.
Pre-tax. Okay.
There's no way to avoid that.
Right.
That's an ERISA rule. I can't change it.
Yeah.
Right. But they were, and it took a while for me even to coach my own employee because, I mean, you love the drug, right? It's like, oh, I'm saving all this money on tax. I'm like, yeah, but you're going to pay more. So I had to illustrate it, and our software shows that now. And I'm like, stop doing this. You're not going to be in a lower tax bracket. I mean, literally, and I'm going to have Jake show this on some of our clients. But the software illustrates the bracket, right? It goes through and shows, okay, it's 70, 67. This is a client that retired a couple years ago, and we're converting his IRA right now. He's like, Brian, I'm paying more tax or about the same tax I did when I was working. And he's a physician, right? And I go, well, yeah, but we're going to save you, in this example, is showing $605,000 in taxes over his lifetime. That's not including his kid's lifetime as well, because they can defer it for another 10 years. The problem is he doesn't need it.
Yeah.
Right? He's got all these other sources of income, which is a good problem to have, but he doesn't need it. He saved it because, I'm supposed to get a pre-tax deduction. So Roth, yes, it depends on the situation. Some rare times we are saying, yeah, you should put in a pre-tax, but you should at least put the match. I agree. And then go do other things.
All right. I'm going to give you my mom's number so you can call her. All right.
Okay, what is it?
It's 866-2PLAN-4. Actually, that's the number 2, Integrity Financial Planning. 866-TO-PLAN and the number 4.